where or on what signal to enter. Do you understand that, Mike Schumann? The rules are very, very simple and very, very clear. No, no, John, I expect you guys to take notes. All right. And those that are really interested in really advancing their learning curve or advancing along the learning curve, I would suggest that you write handwritten notes concerning what we learned, send them to me at my email, and I can grade them for you and send them back so you can start to write your own notes and make your own PDF, John. I'm going to have PDFs developed in the meantime, but I have a whole life after charts that requires my time also. So it's taking me a bit of time to get to it. Okay. Okay, Mike is saying that he thinks he may have missed or misunderstood a part. Okay, Mike, that goes back to your notes again. Because on the screenshots you sent me, you got everything for the most part correct. And I don't know what your issue is right now on that trade, but I don't want to get off course again today. What you could do is take a screenshot, send it to my email address, and I'll take a look at it and I'll get back to you via email. All right, Mike? So, yeah, this is where we're going to talk about the bull flags and bear flags again. I'll drop this. And thank you, Rob, for this email. I mean, for new people, everything you said was right. It was just spot on. So it was very, very helpful. And it's good to see it come from someone other than me, because sometimes, people, they get tired of hearing me. So I just want to review yesterday. If you guys remember where we left off yesterday, we were looking at this area up here as a key area where price may reverse. And all of these candles were not here yesterday. Okay? And what happened was I drew this line. We were discussing where were we? Were we in an uptrend or a downtrend? And if I go to a 15-minute chart, which is what I think we were working on, most people said we were in an uptrend because we had this row of candles here. And if you remember that, I pointed out that we are not in an uptrend, but that we're in a downtrend. Okay? So this is what we saw yesterday for the most part. And most people thought that we were now in an uptrend, and we were not. We were actually in a downtrend because we were making lower highs along the way. See that? In the overall picture, we're in a downtrend. And I drew this mark to show how I thought price was going to behave. And these two pretty much hit it spot on. All right. And I drew this without being able to see what was going to happen in the future, but just understanding how price tends to move around these areas. Now, you'll remember also that when I look for evidence in the past of an area of support or resistance, I'm looking at the last dominant closing price. That's the thing that I'm looking at, is that closing price, because that's where the secrets are hidden. And once you learn how to spot those closing prices and you make a range, I went from the closing price here, on this candle rather, up to the high here, and that was my range. And as we went back in the past, and I'll just go back over that again, I got to go out to a higher time frame. We can see that this violent push down was started because of this push down here. Not started, but it was replicated because of this push down. All right. Now, what I'm going to do is I'm going to drag this section of the chart over to the center. So I'm just going to grab this tool And I'm going to slide this over here. And now I want to zoom in. And that keeps that right in the center of the screen for us. So my contention was the last time price was in this zone, the last time price touched this area, and you see we touched it here. On the 15-minute chart, this is where our touch was. I wanted to go back and see what happened the last time we were here. And here we have two touches here. And the last time we actually touched this area, we had a dramatic push off of better than 100 pips. All right. So when we come back to this area after having been away for a long time, and you see we made this huge triangular movement here, after coming back to this area, I should not be surprised that the next time I hit it, I may get another dramatic push off. Okay, and from yesterday, that was another 100 pip drop. Okay, so when we see a setup, I like to look backwards on the chart to see what other chart-based information do I have to confirm my decision to go long or short. Okay, that's what I'm looking for. So let's go back to the 15, and you can see we had a push off here that was roughly 50 pips, and I was expecting a push off from this area of roughly 50 pips, which we got. Okay, it's about 30, but overnight this thing continued and eventually gave us about the same 100 pip push off that it did the last time we were in this area. So again, I'm talking about repeatable, consistent patterns. That's the cornerstone of what we're trying to do. We're trying to look for repeatable, consistent patterns. Excuse me. And we're trying to take advantage of them with various trade setups that are designed to take advantage of each of the different, it doesn't matter what pair we're on, but this happens to be the euro dollar, Raul. Okay, yeah. So again, we're looking for consistent, repeatable patterns, and this is what happened. And again, we drew this yesterday without seeing what these candles were going to be. When we drew this, we were right about here. So it's good to see that, you know, in a pretty much normal moving market, price will behave in a way that we can take advantage of. All right. So if you see a trade, and this ended up being a price trap also. We weren't here to see this. The class was over by then, but this did end up being a price trap. With this is the trapping candle. And as you can see, the next two candles could not close above this high or close below that low. So this push up created a price trap at a reasonable and logical location. It happened at the same place where we had two hard 100 pip moves originate. All right. So when you see the price trap, every price trap is not tradable. What you want is location. And remember, this price trap occurred at an area that has a history of pushing price off at least 50 pips. All right. So that was the other thing that unfolded last night. And then we had another price trap down here at the bottom. As you can see, this candle, oh, wrong tool. Well, actually, that worked out pretty well. Okay, so as you guys can see, we had nothing close below the low of this candle or the high of this candle. All right, and look, and remember, I mentioned that in order for a price trap to be effective, you must have a 3-candle combination. You have your trapping candle and at least 2 candles. You must have 2 that don't close above the high or below the low. All right. And as I mentioned also, that this trap could go on for days. And you see this one went on for at least 3 hours. And then it finally broke here. All right. And any entries would have placed a stop at the other side of the trap. Or you could have gone to a lower time frame and took a sniper trade, which this actually would have been a good teaching moment, but we weren't there. Had our stop been here and we took a sniper trade here, our sniper trade may have been stopped out in here somewhere, let's say. The beauty of this is that we can wait for another entry to go back in the trade because the take profit potential was so great that, yes, we might have had a small trade that didn't work out, but because the profit potential was so great, we could take 3 or 4 or 5 attempts at it and still walk away profitable. So this would have been a good situation had we been there to grab it. All right, so now, as we normally do, I'm going to ask, let me just grab from the list here. Nigel, can you give me a pair that we're going to look at? Nigel, the price trap is valid until price breaks out of it. Give me a pair, Nigel. Okay, pound dollar. And Medina, give me a time frame that we can look at on the pound dollar. And let's talk about some flags here. Okay, pound dollar. Let me do a new chart so we don't lose the other one. And let me see, Medina is saying 30-minute. Okay, great. So we're on a pound dollar 30-minute. I'm going to make some changes here based on some stuff I saw in the video. Okay. I'm going to try to do a lot more of the lessons in black and white charts because it makes things quite a bit easier to see. Okay. Now, let's just briefly talk about what a bull flag is, what a bear flag is. Bull flags and bear flags usually are continuation patterns where price moves up in a very, very extreme or strong fashion, and then price takes a break and it pulls back. Okay? And then after the pullback, it takes off again. So it's a very, very simple thing. Here's one here in the middle of the screen. This is the flag pole. Oh, I got to change all my colors here now. Let me just do this. I forgot to do this morning. All right. So this is the flag portion. You see these 3 really powerful candles, these really dominant candles? Gave us a nice drive up. That's the flag pole of a bull flag. All right. The actual flag, or the part that's considered the flag, is the pullback here. Does everyone see that? Where these candles are a pullback. We've got all of these highs are lower than the prior candle. Okay. So we have a very, very powerful push up. We have a descending sideways trap on a bull flag. Now, the reason they call it a bull flag, even though price is going the opposite way of the trend, these candles are going bearish. They call it a bull flag because the general market that it occurs in is a bullish market. Does everybody see that concept? Okay. The ideal setup for a bull flag, ideal setup is to have 3, 4, 5 really strong candles, the same color in a row. Okay, as you can see here, that gives us a really that gives us a lot of confidence that this flag is strong. Then we see this pullback, and the pullback is essentially a descending channel. Okay, the pullback is a descending channel. Now, when this flag breaks, or when we break out of the flag portion of this, the move generally will equal the length of the original flag pole. So let me bring this down a bit just to get it in line with the flag pole. All right. And then if I take this and bring this up here, all right, on a breakout of the flag, our distance it travels should be equal to the flag pole. Now, this is one of the number one patterns, one of the more reliable patterns, okay, that you're going to find. Now, John is saying breakout, or does it have to close above the flag? That goes into the entries, John. What type of entry you're going to take, how aggressive you're going to be. That's where that comes into, and we'll touch on that in a minute. But I want everyone to see the first thing you really want to see with a bull flag is several strong dominant candles, all the same color, and then a descending, downward traveling price range. Okay? Like you see how these candles kind of slowly crawl up like that? You don't want that to be the beginning of your bull flag. This is what you want. You want a solid, almost straight up in the air flag pole. All right, let's back off of this a minute. Let's just see if we see another one. And I'm kind of looking for the textbooky ones at the moment. This would be a good one here, but it was a failed flag. I'm going to just show you what we're looking for. You see how we have these dominant candles in a row here? See that? All the same color all the way up. All right. Now, and the beauty of this is, and we do have a bit of a flag here. It's not much, but by following the rules of what to do when you see a bull flag, you will generally not get triggered into a bad trade. Brishu is saying that we may have one on the euro. Okay, we'll come back to that in a minute. Brishu, thank you for that. And now Sharon is saying, can it be just one candle? Can what be just one candle, Sharon? Sharon was asking a question. I just want to make sure I get that answered. Yeah. Oh, if it's one candle, Sharon, one powerful candle that takes up this much space on the chart, that's usually news driven. Okay, and sometimes those can lead to fake outs. Usually you want a few candles in a row, uninterrupted, and then you'll see the pullback at the top. Okay? And most of these are news driven, but if it's just one candle alone, that can lead to so much bizarre behavior in the market. I'd rather see several candles in a row. So here we're looking at, this is our flag. This is our flag pole. This is the descending downward price action, okay, which is the flag. This is the flag pole. This portion would be the flag. And then we're looking for a break of the top of this descending range, and we want price to continue on, to continue higher. All right, so over here, we'd be looking for a breakout up here somewhere and a profit target with the potential of about the flag pole. Now, it didn't happen in this case, which is fine. But if you follow the rules of trading bull flags and bear flags, you would never get triggered into a bad trade anyway because it was a failed flag. It went the opposite way. Okay? Now, I just want to point something out here. I think Tony might have been talking about this, where we have a flag-like pattern here. And here's our This is our push down here. Whoop. Let me just start here and slide this over. And I believe this is what you were talking about, Tony. All right. So here we have a solid row of candles, nice and dominant. And now here's the pullback. This is a bear flag. The same principle applies. We have our pullback candles, which we know from another lesson. But in this particular pattern, the pullback candles create an ascending or rising range. All right. Do you see that? In this case, the range is rising in a down market. All right. So because this occurred in a down market, this flag is considered a bear flag. And ideally, what we're looking for is for price to give us a potential profit target equal to the length of the flag when we break out. And let's assume a breakout. I don't want to pick a perfect entry. Let's just say here. And as you can see, we would have hit our profit target either here or certainly here. Does everybody see that? But the key thing to make it a good flag is you need to have these 3 or 4 candles really work in conjunction. Now you see this is a 1 candle break. If you get a 1 candle break and it doesn't make a significant pullback candle, then ignore it. Just consider it part of this rundown. Okay, Sean is asking, would the break of the flag in the direction of the trend have a higher probability, or is it unknown? This particular pattern, according to Bulkowski and a couple of others that have studied it, if I remember correctly, 66% of the time, the break will go in the direction of the overall trend. And the majority of the time, and I'll get you the exact numbers, I just don't recall them off the top of my head. The majority of the time, you will get a profitable trade out of this. And certainly, you'll get at least half without question. I shouldn't say it that way, but you should certainly get at least half. And what I like about the MetaTrader platform is when I draw these lines, this could be a perfect place right here to take half the trade off. You know, because as you draw these MetaTrader lines, it gives you the center that you can grab and move around. All right, but it's a very high probability pattern, and I believe it was rated the #1 pattern in one particular publication because of its reliability. Now, Sean is saying, so would you say putting a resting order in the direction of the trend is a good idea? Putting a resting order. I'm assuming you're talking about a limit order, Sean? Okay, yeah. Well, that's the whole idea in trading these, is that you want to trade a breakout of the flag. All right, and we'll get into the rules and that sort of thing momentarily. All right. So now this is an example here of a bear flag. This is an example of a bull flag. This bull flag did not play out. Nothing wrong with that. I think we had one other. Here's an example here of another bull flag. It was bullish candles, okay, followed by a descending range. Okay, a descending range, not necessarily a price trap, so be careful of that. We're not looking for this to be a price trap. It could be, but more importantly, we're looking for this to be a descending range. And then we're looking for a breakout of this descending range and for price to continue. All right. I just want to see if I see any others here. Now you see, here's where I want you to be careful of. You see where this is a downtrend, and this could be considered a flag, like that. These are really just pullback candles. That's all these are pullback candles, nothing else. Because you look what led into this was very, very modest, really candles with no actual power or drive at all. Okay. Here we have a nice strong downtrend, probably news driven, but we don't have a flag down here. Okay, ideally, what we would have liked to see was maybe these two candles actually have been the creation of a flag. Okay, that would have kept in this channel and then a break of the channel to the downside. But the flag part never developed. All right. Chris is saying lag. Chris, is there a lag in the audio or the video? I'm trying to understand what he's saying. Chris is saying something about lag. Okay, Chris, so you have a lag in the audio or video on your side, right? Okay, Chris. Okay, some people have a lag and some people don't. I'm not sure how to help you with that. And J101, you said everything's fine. There's no lag in audio or video. Terry is saying he has a lag. Okay, I see that, guys, and I wish I knew specifically how to address it, and I just don't at the moment. Some of you, it's working quite fine, and others are having some issues. And I'm not sure what that could be. And it may be the way Adobe is reacting with your machine. Yeah, it could be, yeah, J101 is saying it could be your computer or the internet connection. Nigel is saying it could be internet bandwidth. And I'm not the techie guy, all right, that could really help you with that. I'm glad you told me. It's something that I can address later. I'll try to contact the tech guys at Pioneer Trading because they're making this room available. But I'm going to move on, and I'll try to slow down a little bit. Maybe that would help. So if there's a lag, it won't be so severe. All right. So what we see is we're looking for dominant candles, and here we have another nice set of dominant candles here, but it never developed a flag at the bottom. All right, and remember, the flag is going to be a series of candles that go opposite the direction of the flag. Okay, so keep that in mind. A series of candles that are going to go opposite the direction of the flagpole, I should say. We don't have any really great ones here. And those are the rules that I personally like to use for the bull flag or bear flag because they have been, quite reliable. This is a good one here also, but we don't have much of a flag here. You'd like to see at least 3 to 5 candles in the flag, and this is not really even presenting itself that way. Inside the flag, you like to see at least 3 to 5 candles bouncing back and forward. All right, let's take another. Here's one here. This one isn't bad. Here we have, again, solid candles straight up. All right, everybody see that? And we have 3 to 5 candles back, which is normally a pullback, but it's also what we're looking for after that flagpole. Okay, so you see how these guys are uniform and they're inside this channel? Just give me a yes or no if you guys can still see hear what I'm saying. All right, so the length of the flag pole is generally equal to the length of the move after we break out of the flag pole. Now, these trades are not quick trades, and that's another thing that I need to emphasize with you guys, in that if you're looking for trades that are going to give you 20 or 30 pips 5 minutes after you press the button, change that thought, because most of these chart patterns that are highly profitable tend to take a while to unfold completely. So I think Curry mentioned he took a trade after our class, but he didn't get the profit until the Asian session opened up. Okay. Um, so keep in mind that on a lot of these patterns, you will wait because um, it took a while. You know, this is a 30-minute chart. Okay, so each one of these, Gene, each one of these candles represents how much time, Gene? I hope Gene is in here. Okay, I guess not. J101, each one of these candles represents how much time? And I'm asking them because I know that they're relatively new. Okay, Gene, you're wrong, or you weren't paying attention. We're on a 30-minute chart, Gene. So each individual candle represents how much time? Gene, each individual candle represents how much time? Don't tell me you're sorry. Tell me the answer. We're on a 30-minute chart. I'm waiting for Gene to answer, so I know he's relatively new and some of this may be a bit beyond him. Okay, great. Each candle represents 30 minutes. Excellent. So this is 30 minutes, 1 hour, hour and a half, 2 hours, 2.5 hours. All right. So that was 2.5 hours to create the flag. Okay. So assume that if we get a break of the flag, that at minimum it's going to be 2.5 hours before you see your profit target. This is very, very important to understand because a great many times, we'll get into trades and we want our money right now. We want to see our profit right now. When we get into hyper scalping, which is scalping on the 5-minute and 1-minute chart, then you'll see where you can pick up a few pips here and there pretty quickly. But that's like at least a month or so away. Okay. Hyper scalping, yes, you can pick up pips very, very quickly, in and out, in and out, in and out on the 5-minute and 1-minute chart. However, when you go to the higher time frame charts, you can get a general bead. No, the probability does not go down when you're scalping. Gene Curry is asking, does your probability go down when you're scalping? No, absolutely not. But we don't scalp bull flags and bear flags. Scalping is something that it's an altogether different beast. Okay, different chart setups. We use a couple of indicators. Okay. But as I said, that's probably a month down the road yet. There's a lot of other stuff that we have to cover before we get there. So, just for your own psychology, I really want you to understand that if the flag took 2.5 hours, expect 2.5 hours to pass before you get your profit. Can it happen sooner? It absolutely can. Does it happen sooner? Most of the time, no. All right. So if I look at this breakout here, here we have this candle closed above the, let me just move this up here. Let's assume we did everything on this chart. Let's assume that our entry is here at the open of this candle. Okay, your stop loss is behind the trap, and we'll talk about that in a minute. If I took, now this was 1, 2, 3, 4, 5 candles for 2.5 hours. If I count the next 5 candles, 1, 2, 3, 4, 5, in this case, we traveled 2.5 hours and made 13 pips. Depending on how you are looking at profit, depending on how you are looking at what you expect out of price action, that could be the longest 2.5 hours of your life to only get 13 pips. So this is very, very important on many of these trades. A lot of these trades that you take on the 30-minute charts and higher are going to take time. So keep that in mind that it may have taken, like I said, 2.5 hours for the flag to form. But in this case, let me just count how many candles it was. And someone will have to do the math for me. Okay, we've got 50, I'm going to call it 60 pips here. So let's go over here. I'll call it 55 pips. Just keep it simple. Okay, so this is our start, and 55 pips is, my mouse is giving me a hard time today. Okay, so this is 55 pips profit in here. And now, for those that are not familiar with MetaTrader, I'm going to slide this down here. You see where my crosshair is? J101, Raul, Jose, and Gene. Okay, what I want you guys to notice, there's 3 numbers there. The first number is 35. Okay, that number means that's how many candles I am away from where I started. So right here on this candle, I'm 34 candles away from where I started. All right, the middle number is how many pips am I away from when I started. Okay, the middle number now on MetaTrader it says 216. Take off the last digit, so it's actually 21.6. So when you look at this, I'm 34 candles away from where I started. I'm 21.6 pips away from where I started. And the price where the crosshair is sitting, exactly where the crosshair is 1.65811. You guys see that, right? So if I go over, so if my profit target on the bull flag is 50 pips, when do I actually hit 50 pips profit? So I can drag this out and I can look. I move it up until I see 50 or 500 in the middle number. Do you understand that, guys? When I see 500 as the middle number, that's when I know I made 50 pips. I just want to make sure you guys are on board. Okay, now I'm 43 half-hour candles away. I'm 43 half-hour candles away. So it took 43 candles to give me the 50 pip take profit. Okay, very good. 21.5 hours. Curry, thank you for that. So I really want you to get this locked into your brain. Just because price may be moving very slowly in your direction doesn't mean that you're wrong. It also doesn't mean that your stop loss is in any danger. All right, keep that in mind. Many of these trades, the last number is location. No, Jose, the last number is the exact price where the crosshair is. You see the number 39, Jose? If you look at the number 39, there's a crosshair right above it. Exactly where those 2 lines on the crosshair are crossing, that's the price at that point. Okay? So I'm 43 candles away. Where am I for my 50 pips? I'm 43 candles away, or 42 candles away. 43 candles away, and the price at that point is 1.66518. All right, so this is how a quick way of measuring things on this platform. So don't get discouraged when you take these trades. Just keep that in mind. Understand the time frame you're on. All right, once you understand the time frame you're on, always assume it's going to take longer to get the profit than it did for the trade to set up. Okay, and these are, what we often call set and forget trades, where you set it up, you put in your stop loss, and go live your life, because there's nothing you can do at that point except watch it unfold. All right? Any questions on that part of it? Just on the psychology of it. Let's go back to the other bull flag. These were not good ones. I think we had one in the beginning here. Okay, here's one. Here are a couple of them. So here's one. We're still on a half-hour chart. 1, 2, 3, 4 to create the flagpole. Okay. And then here we have our ascending channel. All right. And then we're looking for this profit target down here. All right. Do you remember that? So now let's do the same situation. We were looking for how large is this line? This is okay, so this is 70 pips of profit. That's what we're looking for here, 70 pips of profit. It took 1, 2, 3, 4 candles to create the 70 pip flagpole. I know it says 80, but I'm going to cheat it to the wrong side. You know what I mean? I'm going to err in the side of caution. So it took 4 candles to give us 70 pips, all right, to create the flagpole. How many candles did it take to give us the 70 pips profit on the breakout? So let's start on this candle, assuming we had an entry in here somewhere. All right, so I'll start here at the close. And we see where our 70 pips, eventually we reached it on this candle. So let's measure it. All right, and again, if you do the math, we are 29 candles away from where we started. So this is 29 half-hour candles. All right. 29 half-hour candles to give us 50 pips that were created by only 4 candles at the beginning of the trade setup. And again, keep in mind, with the entry here, your stop can be back here, unless you're using a sniper entry. Your stop will be back on this back touch. Okay? So your stop was never in any danger. Did you understand? But would you have the stomach to wait for 29 hours and not think that, you did something wrong? This is what you have to think about. And on these longer term trades, I get a lot of people say, why do you take half off? Go for all of it. Get all of it. Take it all now. If that's your style, stick with it. But to be perfectly honest, in my life, I have bills to pay. If I take this trade on one standard lot and from here to here it's up 30 pips, that's $300. I can do stuff with $300. And trust me, I will grab that in a heartbeat. I mean, there will be smoke coming off those pips when I run out of here with them. Cops would have no problem finding me. Just follow the trail of smoke and burning rubber. All right? Now that's me. I understand me. All right? And I have to trade who I am. So you can develop your own style and have fun with it, by the way. Have fun with the language. You hear me talk about Uncle Lou and I come up with all these different names and stuff. Have fun with it. Don't make it, like the job that you hate. You don't want to do that. Okay? So everybody understand that. You can go and just wait. Like I said, it's a set and forget. This could happen while you might be shopping or whatever. As Gene likes to rub it on noses, you could be at the beach and this could happen. Everybody follow that? When we get to money management and trade management, which are two different things, we'll get into all the different possibilities here. But I'm just saying that if Uncle Lou gets 30 pips, trust me, I am leaving the damn building with it in my pocket. So now the other aspect of this too, and again, this goes to psychology, is if we entered here and you come back to check the trade and like, oh man, I'm up 40 pips, $400. That's really cool. And you say, okay, I'm just going to let it run. And then you go make some coffee, do some life stuff, and you come back and all of a sudden it's like, oh shit, I was up 40 pips and now it's back to only 15. Oh my God, what did I do wrong? Maybe I should close the trade. And you get into that whole thing. Okay? Where you were up 40, you left it, you came back, and now you're only up 15 or 16. It's like, oh my God, 30 pips off the table already because I didn't do this, I didn't do that, I should have did this, I should have did that. Okay? That comes into trade management. That's why I say trade management and money management are two different things. They work together, okay? They work together, but they're two different things. Um, Gene is saying, as a beginner, where should you concentrate? You should concentrate on learning the basics the right way the first time. Learn the basics the right way the first time. Gene, that's where you should concentrate as a beginner. Okay? What time management, J101 is asking me, so time management, what should we do? I'm not sure what you mean by time management. I was mentioning trade management versus money management. Well, what you would do in this situation, Jay, it's up to you. That is completely up to you because you know what you need in your pocket. You know what I mean? And you will soon. J101, did you take the trader the trader psychology test? Did I give you that test yet? Did I send it to you, J101? Okay. What was your number? Jay, what was your number on that test? And oh, you're doing it today. Okay. So when you take that test, send me the number, and then I'll send you the score sheet, and it'll give you an idea what type of trader you might be. I'm sorry. What type of trader you are probably like. All right. Jose, I'll send you the test later. Okay. I still haven't worked out how to share files easily in this particular format. That's another issue, but that'll take us away from trading. I don't want to talk about that. All right. So understand on these longer trades, like on 30-minute, 1 hour, 4 hour, you can guesstimate about how long it'll take you to see your profit. All right. So again, on these trades, don't get bonkers if you're in a trade and you come back 8 hours later and you still haven't made your 50 pips. It's the nature of some of these chart patterns that it will take time for some of these to unfold. I sent the test to you, Gene. You have to go back and check your emails from like 3 weeks ago or so. But I will send it again, just in case. All right. So does everybody understand the thinking process behind how long it takes to make a profit on this particular chart pattern? Always assume it's going to take longer to reach that same 50 pips than it did for the trade itself to set up. This is crucial because when we get into swing trading and long-term trades, that's when this will become very, very crucial to you. And that's when it'll become important. Right now, I just want you to understand, depending on the setup, it may take you longer to see the profit than it did for the trade to set up. And again, I repeat over and over and over because, sometimes I say it a bit differently. Somebody else may catch onto it from there. Okay, Helen, if you could give us a pair. Where is the stop loss? I'll get to the trading aspect of it in a minute, Brishu. Brishu is asking where is the stop loss on the last candle top. We'll get into that. I just want to look at a number of these. Okay, and the reason I look at a number of them is that because the candles are always going to be different sizes and shapes, these patterns are not going to look identical to each other. That's crucial. They'll be similar, but not identical. I want you to see a number of different variations of them. Okay, it's kind of like shopping for the melons again. Okay, they all look kind of alike, but if you look closely, no two melons look exactly alike. So we will get into the trading aspect of it, but I do want to look at a couple of other formations, and I want you to see them on different time frames. So Helen, if you're there, can you give us a pair to look at? Someone mentioned a a price. I'm sorry, a bull flag or bear flag earlier. I forget who that was. Helen's not responding for some reason. Manuel was a EU 15 minute. Okay, let's go take a look. In fact, let me just sort this stuff out right now. Let me see. EU, pound dollar, you guys ask a lot about. Aussie dollar, you ask sometimes. Pound yen, I'll throw that up at the top. Okay, so we're going to look at EU 15 minute, and that was in current time. Oh, GU was mentioned also. Okay, you're throwing me off now. Which one had the flag? The EU or the GU? And Manuel is typing. Okay, I don't remember the chef being mentioned, but what happened here? This was 11. If you see it says 11:30 down there, that was had to be a news candle. Okay, so this was definitely some news release that was occurred today. All right. Now here would be a possible flag. All right. Now the only thing with this that I'm not particularly comfortable about was that a part of this was clearly driven by news. And a lot of what's going on here could be a gut reaction to news, and then the market could come right back where it started again. And again, if we look at this, you see that's the 8:30. Let me just see something here. I want to make sure I have this right. I don't know what the timestamp is on this broker, but this does appear to be a news-driven candle. I'll just go with that. And this would be the possible flag. All right, let's just squeeze this down a little bit. All right, so now let's measure the flag. And the flag was 70 pips, 60 pips. Let's say 60. All right, I'll cheat it up a little bit, 60 pips. I don't like to pick the perfect thing. We kind of missed an entry, which would have been here. So we are potentially looking for a profit target about here. Everyone see how I did that? All right, we have these 3 or 4 really strong candles down. All right, this isn't perfect, but it's perfect enough for this explanation. It would have been nicer if this candle wasn't in the mix, but I'll take it. All right, now, and here's our flag. All right, and you see that, the rising lows. And remember I said a flag could be a bear trap, but it doesn't have to be. Not a bear trap. A flag could be a price trap. And as you can see, this candle created a price trap here. And all of these candles happen to be caught in the price trap and the bear flag. Now, for those of you, who that weren't here when we covered price traps, on Friday I do a review, and I'll review all of this stuff again on Friday. Friday's generally for the new guys, all right, or anyone that wants to just brush up and go over a particular point or whatever. So everyone see that. So our ideal entry would have been here, all right, and we're looking at a 60 pip take profit, and it took 1, 2, 3, 4, 5 15-minute candles to give us 60 pips. So we are looking for at least 5, possibly a lot more candles to give us the 60 pip profit down here. Is everybody clear on that? Now, Sean is asking, in such a case where the flag and a price trap, would you consider the break of the price trap or the flag? I'm only talking about the flag pattern at the moment. I mentioned that a flag can also be part of a price trap. And the reason I'm doing that, Sean, is that it's been my experience that some people can see one thing much, much better than the other. So when I'm talking about the flags, I really just want you to learn how to see the flag. If you spot the flag and it happens to be a price trap, If you're more comfortable with the price trap, then trade the price trap. You got me? I'll give you a real life example of somebody. There's a woman we know. Well, I won't mention her name, but her goal when we did our trading plans, her goal was to make enough money to pay for a nanny. Okay, that was what she was trading for. So that was cool. She knew where the money was going to go, and that goal of wanting a nanny would tell her when to stop trading. She wouldn't overtrade. She wouldn't mess up the account. And I believe in 6 weeks she took $5,000 and turned it to 12, and then a few weeks later that 12 became 22. But the only thing she was trading, and I want you to hear me carefully, the only thing she was trading was divergence. Okay? She was trading stochastic divergence on I believe it was a 1 minute, and I think so, like a 10-second chart. Oanda used to give you like these very, very different time frames. But that's what she was doing. Okay, that was all she was trading was divergence. She just had an eye. It clicked for her. You got me? Now the rest of us, I mean, when you trade on like a 10-second chart, that makes coffee nervous. A 10-second chart. All right? But this is what she did. And she could see divergence. Now, along with the divergence, you had bullish engulfing candles, bearish, you had bull flags, bear flags, price traps, triangles. All that was occurring at the same time, and she could have traded those based on what she was looking at by looking at divergence. But what worked for her, she could see the divergence. She could see it a mile away, and she would jump on it real quick, and she was taking 2 pips, 3 pips, 1 pip, 2 pips, 2 pips, 2 pips, 4 pips, 1 pip, a -3, a +2, a -5, a +6, 3, 2, and just banging the daylights out of it. I mean, really, she did just outstanding. Okay. So I'm saying that to just impress that the question about should I trade this as a price trap or as a flag? Which one can you see better? Which one are you more comfortable with? Now keep in mind, by trading it as a flag, our profit target is 60 pips. By trading it as a price trap, keep in mind that the price trap is usually going to be twice the width of the box. You got me? So by trading it as a price trap, we're looking at 40 pips profit. So the price trap would give us a profit of, up in here, 40 pips. The flag would give us 60. So which one are you more comfortable with? What's your style? What's your daily number? What's your daily number? You got to take that into account. That's the number one thing you should take into account. And the single most important number in trading, the single most important number is your daily risk allowance. Just imagine your mom gives you an allowance that you can spend any way you want. It's your allowance. Do whatever you want with it. Well, you give yourself an allowance every day, and that allowance is your stop loss. So if I'm working with Jose and I say, Jose, you have a 20 pip allowance today in stop losses. I don't care how you break it up, but you can't lose more than 20 pips. You got me? So on a standard account, Jose could take one trade with a 20 pip stop. On a mini account, $1 a pip, Jose could take several trades because on a mini account, that same 20 pips equates to 200. That same $200 rather equates to 200 pips. I got that kind of crossed up. You understand what I'm saying? Then let me just get my thinking straight. Yeah, on a mini account, you get a 200 pip stop. So you've got 200 pips worth of stop loss to play with. All right? On a standard account, you only have 20 pips of stop loss to play with. So that's the single most important number in trading is your risk, because that's the only part of the trade, that you have total and complete control over. You cannot control anything else in trading, anything. All right. So let's go back to this flag. And I got a bit off course, but that was worth it actually. So here's our flag. Here's our push down. This is our potential profit in here. All right. There was another one. You said EU, and what was it? What were the other ones that had flags setting up? Somebody? I can't scroll back here. The scroll thingy on my side. Once you guys start typing, everything disappears pretty quick. EU, GU, and Dollar Chef. Okay, let's go back to. Okay, GU, 15-minute. We were on GU already. And current time, I'm assuming, yes? Oh, damn, it's gone already. Okay, but this was a good one, too. Again, news-driven, but... And you see how easy it is. A solid flagpole. And this is a nice flag. Remember, we want 3 to 5 candles backwards in the flag. Let's go here. All right. And now this could have been one of several potential entries right here, a close outside of this channel. And Mike Schumann, I know I didn't draw these trend lines perfectly exactly to the, what do you call it? So don't, keep your hand off your mouse. Don't type anything. You guys understand, I'm just giving you just a quick layout, okay? And this would have been our entry here. So our profit potential here on this flag was 100, it says 115, let's call it 100 pips. All right, so now what we're looking for then is a potential 100 pips from this point, which would be about there. And what is that? 100 pips. Okay, I'm going to go right here at this point at 62.75, and I'll creep it up just a hair. And this should be our profit target up here. Okay, good, about 100 pips. All right, does everyone see that? Now, here comes an extra credit question. If we miss this entry, but we believe that this flag is going to give us the 100 pips, how could we get into this trade and still pick up some of the money from here to there? I'm going to wait for a few answers to come in. Daryl, not quite Daryl on the sniper, but Sharon's got it right. Sean's got it right. Manuel, we were not talking about limit orders at all. We haven't covered limit orders. When we discuss trade management, we'll get into limit orders. Okay, Terry said pullback. Sean said pullback. Okay, so one of the simpler ways to get back into this is with a pullback trade. All right. So, and what that would look like is here you have your 3 to 5 candles in the direction of the trend, and we'd be looking for 2 to 3 candles to come back this way, and then we would be looking for the push back in the direction of the trend again. And somewhere down here, we'd be looking for a break of this trend line. Everybody understand that? This is stuff we learned already. So if you miss this, but you still believe there's some potential, then you wait for the pullback. Because remember, price goes up, pulls back, goes up, pulls back, goes up, pulls back. So that's a way you could enter this. And the beauty of this is that you're entering after the first pullback on this break of this bull flag. So that could give you a little bit of confidence. Phil919 is saying you could drop down time to a lower time frame, then look for a break of some kind if there's not much prospect of a pullback on the setup time frame. That gets to be a bit like gambling, Phil, and I'll tell you why. The rules are always set up so that you always know where you are. You can always put the rules on a checklist and check them off. Did I follow this? Did I follow that? Did I follow the other thing? So and listen in your language, you'll see what I mean, Phil. I'm going to read your question. You could drop down to a lower time frame then look for a break of some kind. That's the danger part. You get me? You should never look for some kind. You should know what you're looking for before you leave. Almost every time you get in your car and put the key in it, when you turn that key, you know where you're going. You get me? So make sure that you know what you're looking for before you go down to the lower time frame. And the way you know what you're looking for is to say, I'm going to look for my favorite trade setup, whatever that trade setup is for you. I'm going to go to a lower time frame and look for my favorite trade setup to get into this trade and catch the trend. You follow me? Don't just look for some kind. It's better if you have one trade setup that's your bread and butter. And you can say, you know what, I missed this trade. I'm going to jump down to a 5 and I'm going to look for my ... trade to get back into this. Do you follow what I'm saying, Phil 919? That's really important. And don't ever say, I think, I assume, it looks like. The rules I'm giving you are so crystal clear. They're just completely crystal clear. Pick your favorite entry, and that's what you look for. So when you go to a lower time frame, you're not just, gee, how do I get into this? What do I do? No, you've got 3 or 4 tools now. Pick the one that's been the most consistent for you. All right? Does that make sense? Now, this flagpole, 1, 2, 3, 4, 5 15-minute candles, all right, to go 100 pips. And now if we go 1, 2, 3, 4, 5 15-minute candles on the breakout, the 5 15-minute candles on the breakout only produce 20 pips. I'll go up to the next candle even. It produced 30 pips. Do you see that? So keep in mind, on these particular patterns, it's going to take you longer to get to that profit target than it did for the trade to set up. Again, this is another very clear example. 5 candles to get the thing going, but after 5 candles after our breakout, we've only netted 30 pips. We're not even a third of the way there yet. Now, Brishu is saying that he made this mistake today, where I guess you went to a lower time frame and just jumped in without having a rule of some sort, Brishu. Okay, yeah, when you go like hunting for stuff, you really need to know what you're doing. Never pull the trigger unless you can verify and document why you did it, because at least you can go back and double check. And the key thing here is you always want to double check. You always want to double check. You want as much evidence as possible in your favor. Okay? Any thoughts or questions on this? Now, to give you a rule-based setup for here, what I'm looking for is at the close of this candle is not closed yet. If this candle closes the way it does right now, then I can put my trend line, because this is my first lower high. You got me? Everybody on board with that? So this is what I'd be looking at. This is my first lower high. If this candle closes down here and doesn't make any more of a higher high, then I'd be looking for a break of this trend line. Now let me get rid of these lines. And let's just talk this through. If you wanted to enter this trade after it took off, but you still are fairly confident that you'll get that next leg up. All right, I just want to get these lines off the chart so we're clear. Delete. So now we're on a 15. Let's go down to, let's say, a 1-minute chart. And again, I'm cheap. Okay. I buy stuff on sale, if I could. So now what we're looking for is a break of this trend line on the 1-minute chart. Now I want you to notice, remember the 15-minute chart, we saw one candle? All of these black candles are in that one 15-minute candle. You guys understand that? All of these black candles are in that one 15-minute candle. And what I could do, I hope this works this way. I'm going to put a box here and then go back to the 15-minute and hopefully let's see if this box is inside that 15-minute candle. Oh, pretty much is. Yeah, you see that? All of those candles we're looking at are inside that 15-minute candle. So it's 15 1-minute candles make that one 15-minute candle we're looking at. And now we're starting to get a fairly decent pullback here. All right, but we still, to go long now, we need to see a break across this trend line to get us back into the long position. All right. Any questions there? Let's go back to the 1 minute. And because the 1 minute is so far out, you've got a little time now to wait. You know, you can wait and see what happens here. So you're not in a rush. You can leave this 1 minute here. You know what this line is for. And again, as I showed you before, when you do longer term charts, especially on a 4-hour and daily, go to Trendline Properties. And here you can type in oh, I don't even know if that took. Shoot, I didn't even look. Oh yeah, okay. So bull flag pullback 15-minute. All right. So now I can just leave that on a 1 minute chart, and I'm not concerned with it. All right. If I forget what it is, I just right click. I go to Trendline Properties. Oh yeah, bull flag pullback 15-minute. Then I can go back to the 15-minute and see why I drew that line originally. You see, so you're never in the dark. Okay, you never want to be in the dark when you're trading. You always want to know where you are. It doesn't mean every trade's going to work out. But what this does, by the way, is it isn't so much, and I want you to hear this carefully, it isn't so much that what we're doing is about picking the perfect entries. It's about not picking the bad entries. So I want you to understand the thinking process there. We're eliminating, I'm not even teaching you any of the stuff that could lead you to make bad entries. I don't even want you to even think about that. Okay, what we're doing is we're following rules that will prevent us from entering bad trades in the first place. So if you can eliminate a lot of mental mistake trades, it automatically increases your win-loss rate. It automatically increases your hit rate, because by design, you're not even learning in the beginning how to get into a bad trade. You get me? Because those are the ones that really kill you. It's the ones that you look at and say, oh, gee, I didn't see that. Or I should have noticed this. Or I forgot about that. What we're doing by using rule-based trading, and there'll be some subjectivity. That's always going to be part of trading. And by subjectivity is one person may interpret a bull flag slightly different than the next. That's subjectivity. You know, someone may pick support and resistance with two slightly different lines than the next person. That's subjectivity. Doesn't mean either one is wrong, but they have their own little, you know, tweaks they like to put into it. Okay, so this is about not taking the bad trade in the first place. All right. So, any questions on that? Now you see we've got this pullback coming. I'm going to ask you another $64,000 question, and we learned this early on. Can someone give me an idea how far this pullback will go before it turns back in the direction of the trend? And we touched on this. How far would this pullback go? We didn't do fibs, Daryl. We didn't do fibs. Okay, Sharon is partially right. See, I told you girls are better traders than guys. Sharon is partially right. Jose is to the length. Go to the last low. No, I think I get what you're getting at. length of the bull flag on the left. George might be in the right ballpark. Previous pullback. Okay. Richie's pretty close on it. John, we didn't talk about next big number. When we get into support and resistance, that's when we'll get into all that stuff. Midway to the biggest long candle. I kind of see what you're getting at, Sharon. All right, but I'm just going to show you. If you remember, when we talked about the pullbacks, generally tend to be about the same length. If we were to measure this pullback, okay, and then this pullback, let me do it in height, be easier. This pullback was about a 40 pip pullback. We could realistically look at about a 40 pip pullback on this. Okay, that's number one. Okay, and Sharon said 2 to 3 candles, which is an excellent way to think about it. It keeps it nice and simple. The other way is that this pullback could go to this last high or this last high. Okay, and let me just touch on that briefly again. Let me just find a spot that would make sense. Let me squeeze this in a little bit. Oh, here's one. No, I want to find one that makes a little more sense. Okay, here we go. Here we have a push up, a pull back, a push up, and a pull back. I want you to see that this pullback stopped very, very close to that old swing high. You see that? That pullback stopped very close to that old swing high. This push down, this pullback stopped right in this area. See that? It poked through, came back, tapped it dead on the nose again, and pulled off. Okay, so usually these pullbacks will go back to the last swing high. Not a guarantee every time, but you should always ask yourself, where do I think price is going to go and why? And this is what helps you develop that kind of inner voice. And some people think it's intuition, and it's really not. It's just thinking the market through. What has it done traditionally over and over and over again? Oh, and I understood what you meant, Jose. I understood completely what you meant. Okay, so this pullback could stop at this old swing high right here, or possibly this one, or roughly these 40. Well, actually, this is the pullback. Yeah, you take either one of these, and it's about 20 pips. So it could either be a 20 pip pullback, 2 or 3 candles, as Sharon said, but and this is where the subjectivity comes in. All of them are essentially right. The 2 to 3 candles is right if you want to look at it that way. The 20 pip, what was the last pullback measure? This was 25 pips. This was 27 pips. So I could certainly say, okay, this pullback could go about 27 pips. Okay, 25 pips, which would be right here anyway. This is where the subjectivity comes in. Pick the one you are the most comfortable with. Pick the one that you've been able to see and it's played out for you over and over and over again. And I keep repeating that because it's very, very important. If you don't have one, then use the methods that we've talked about here, because I know from my own experience that they work. All right. So to continue this trade, let's say we missed our entry here. We want to get back on this because we really believe that this profit is going to come. Then we wait for this pullback to finish. And if I put a marker across this high right here, that was the last swing high. So I wouldn't be surprised to see a couple of candles maybe stick their nose down here and possibly go back up. If I go to the highest high in this little cluster, we've already hit that. Am I going too fast for anyone? Some of this does take some time to understand. Okay, Jose, on these pullbacks, I don't know if you were here when we talked about the building blocks of price action. Okay, and I'm working on the getting the videos to everybody. There's 7, but only 3 were updated for some reason, and I have to talk to you guys about it. John is saying when there are pullbacks, is that when the banks are removing positions? No, John. And yes, John. The reason I say both of that is that there's nothing in the candle that could tell you the name of the person pushing the buttons. So to get it locked in your brain that it's a bank doing it or that it's a hedge fund doing it, unless you got that phone call and someone said, Citibank is dumping 10,000 yen on the market or whatever. If you didn't get that call, you really don't know who's doing it. You got me? So don't get too wrapped up in that part of it. Get into the part that pullbacks are predictable, pullbacks are repeatable, and if you know what to do with pullbacks, they can be profitable. I wouldn't care if a 6,000-pound giraffe with heart disease pressed the trigger on the mouse. You got me? I just need to know what to do when I see the reaction on the chart. So don't get too wrapped up in all the conspiracy theories. All right? When we get into news trading, okay, and that's much farther down the road because there are people that only trade the news and do very, very well. When we get into news trading, then you'll be able to look at the news reports and you'll be able to decipher which part of a country's macroeconomic engine is pulling the trigger on this news report. Okay, and then you have things like option expirations and all that sort of thing that can affect the currency market too. Somebody may be holding options that are going to expire at a given price, let's say 1,500, and you'll see price go up and hit 1,500 and come back. It'll go up again and hit 1,500 and come back. That could be indicative of someone trying to protect that level until their expiration date comes in. Okay? So we'll deal with that when the time comes. But for now, it's a matter of just getting the basics. Okay? Get the basics down firm. Now, let me go back to the question of the pullbacks. I just want to touch on this, kind of quick. Let me find a generic trend here. I want one that I can explain this to Jose quickly. And I actually don't see one. Every time I'm looking for one, I can't find one. So someone just keep an eye on this chart. Let's see how this unfolds. You can watch it on the 15 or the 1 minute. Let's just see what's happening here. Oh, we have a break on the 1 minute. Okay.